All right, let's dive right in. We are talking about one of the biggest stories happening right now, where old school Wall Street money is crashing into the world of crypto. And believe me, this isn't just another headline, it's a partnership that is truly rewriting the rules for how we own and use financial assets. You're going to want to see this. First, just to set the stage, let's talk about the sheer scale of what's happening. The company making this move is Franklin Templeton, and they're not just some small player. We're talking about a financial titan with over $1.6 trillion in assets under management. This is not a test run. This is one of the world's biggest managers making a huge, decisive bet. So what exactly are they doing? It's simple, but it's profound. They are putting their main products, ETFs, for things like stocks, bonds, even gold, directly onto the blockchain. This is a massive signal that they see the blockchain not as some kind of speculative casino, but as a serious global accounting system that runs 24/7. So a move this big doesn't happen in a vacuum. Who are the key players actually pulling the strings and making this all happen? Let's break it down. It's really a tale of two worlds colliding. On one side, you have the legacy giant Franklin Templeton, and on the other, you have a crypto-native innovator, Ondo Finance. Ondo is the one building the critical plumbing to bring these traditional real-world assets into this new decentralized ecosystem. And this chart right here, this tells you exactly why Franklin Templeton chose them. Ondo already dominates about 70% of the entire market for tokenized equities. So by landing this deal, they've basically cemented themselves as the #1 leader in bringing real-world assets, or RWAs, on-chain. Okay, so we know who's involved. But the real question is, how does this actually change anything for you, for the average investor? This next part is all about the fundamental shift from the old way of doing things to the new. So, through this deal, you can now get your hands on tokenized versions of these 5 different investment strategies. And we're not talking about niche products here. This is the core of a portfolio. Growth stocks, corporate bonds, gold, all now available as digital tokens on the blockchain. And this comparison just lays it all out perfectly. It shows the 2 biggest upgrades. First, instead of being trapped by stock market hours, 9:30 to 4, you can trade these things whenever you want. 24/7, 365. And maybe even more important, instead of some broker holding your assets for you, you hold them directly in your own crypto wallet. That is what true digital ownership looks like. Now, when you have assets of this size and importance moving onto the blockchain, it naturally creates new centers of gravity. So let's take a look at which blockchain ecosystems are becoming the new hotspots for this wave of institutional finance. The answer is kinda twofold, and it's pretty smart. The tokens themselves are officially born on Ethereum. You can think of Ethereum as the ultimate source of truth, the main settlement layer. But the real action, the trading, the using of these assets, that's primarily happening over on Solana, which was picked for its incredible speed and super low fees. And wow, the impact was immediate. This flood of institutional money has been a massive catalyst for Solana's real-world asset market. It's pushed the total value to a new record of over $1.8 billion. The capital is definitely flowing in this direction. And this isn't just happening in one little corner of crypto. It's spreading out. On Solana, you've got protocols like Camino and Solend jumping to integrate these ETFs. Over on Ethereum, they're probably going to land on giants like Aave and Morpho. And even BNB Chain is getting involved with a new program from Binance. This is a full-on multi-chain movement. Okay, now we are at what I think is the most important part of this whole story. It's not just about being able to trade at 3 a.m. The real revolution here is what you can do with these assets once they're in your wallet. This quote just nails the old problem, right? In the old world, if you owned an ETF in your brokerage account and you needed cash, what could you do? You had to sell it. That's it. And that might mean paying taxes, and it definitely means losing your investment position. Your capital was totally trapped. And that brings us to the key concept, DeFi utility. See, because these ETFs are now just tokens on a blockchain, you can plug them into all these different decentralized finance apps. And the big one is using them as collateral. This lets you borrow money against them without ever having to sell. So let's walk through it. Say you have that tokenized gold ETF sitting in your wallet. You take it, you deposit it into a lending protocol. Let's use Camino as the example. Instantly, you can borrow stablecoins, digital dollars, against it. But here's the magic. You still own the gold ETF. You still benefit if the price of gold goes up. All you've done is unlocked the cash value that was trapped inside it.
This is a total game changer for making your money work harder for you. So where does this all lead? What happens next? Well, this isn't just some experiment. This is the foundation. A permanent bridge is being built between Wall Street and the blockchain, and it's only going to get wider. At the end of the day, a move like this from a $1.6 trillion giant, it validates the blockchain as a core piece of the world's financial plumbing. It's a ledger that's always on, always working, and it doesn't take weekends or holidays off. And that really leaves us with one final huge question to think about. When all the world's most important assets, we're talking stocks, bonds, real estate, gold, when they all exist as tokens that you can hold and control yourself, what does that mean for the future of banks and brokers? What's their role in that world? That's the future we're building towards. Thanks for joining me.